But what if I sell and then can't find a house to buy? We are in the middle of the craziest seller's market anyone in the US has ever seen. That means selling a home should be easy, right? Just put a sign out in the yard, wait for the cash to come rolling in. I hate to burst your bubble. Get that, my little economics pun. But actually, it's not as easy as you would think. For starters, think about this. In most cases, every home seller is going to need a new place to live, which makes them a buyer in a market with the lowest inventory we've ever seen. But what if I sell and then can't find a house to buy? That's part of the fear, and that's what we're talking about today. You as a seller have two transactions to manage, the sale and the future purchase. When you're both buying and selling a home at the same time, there are a lot of things to consider. In today's video, we're going to talk about some common misconceptions that sellers make about selling their home. And let me be honest, not understanding the selling process can cost you a lot of money. First, we're going to talk about some truths about marketing a home that, if done incorrectly, can cost you a lot of money in the sale. Then I'm going to specifically address some of the major struggles of balancing both a purchase and the sale of a home at the same time. I'm going to give you 4 strategies that you can use to take some of the pain and some of the risk out of that process. Misconception number 1, the first 2 things we're going to talk about is about the marketing process, which is attracting the buyers to your home. One of the strategies we use when listing a home is home staging. I know this is not something new. You've all watched your fair share of HGTV, no doubt. But for some reason, in a hot market, I still see a lot of homes that have not been staged. There's a reason that large national builders spend so much money decorating their models. It's not just to give people a fun activity on Sunday afternoon. Staging a home gives the buyer an emotional connection to the home. And I know it's hard to believe, but buyers pay a lot more for a staged home. A lot more. I've seen buyers fall in love with homes that didn't even meet their needs for the basic number of rooms and then cry when they realize they couldn't make an offer on that home. And in a market where bidding wars and buyer frenzies are common, you want buyers to really want your home. Look at these 2 properties. They're both located in highly desirable parts of the city, walkable to great shopping, and pretty close to each other. Both properties were listed at $450,000. This one was not staged. They really didn't make much effort to make the property look nice. There's laundry on the table, but this is a great market, right? Yes, it is a great market. So this property received a cash offer for $11,000 over list price and sold for $461,000. Fantastic, right? It's a great market. They didn't even have to do anything. Okay, but now look at this property. It's about the same size and very close in location to the last property. It was also listed at $450,000, but this home was nicely staged. They cleared out all of the junk, had some matching pillows and rugs, made some effort to make it look loved and beautiful. This home sold for $475,000. That's a $14,000 difference. A little bit of love goes a long way in a listing. Misconception number 2, home repairs. I'm just going to sell my home as is. The market is so good. There are no homes available. People are just going to buy it. You really need to think about this one, because depending on what kinds of repairs that need to be done, you might be listing a home that can only get a cash buyer. If any of your major systems are not working, a bank or mortgage broker is probably not going to give a buyer a loan on your home. So then you're going to be looking at investors, and investors want to make a profit. So you'd be basically agreeing to give the profit to an investor rather than keeping it for yourself. Okay, maybe you're thinking, I'm a little tight for cash and I don't have money to do any repairs. There are ways around that. You can take out a home equity line of credit. This isn't a big deal for most people who have lived in their homes for at least a couple of years. In addition to what you've paid down on the loan, you're in a seller's market, so your home is likely appreciated more than usual. You probably have some equity that you can borrow against to make the repairs. I mean, if you can borrow $20,000 against your $50,000 in equity, and that would allow you to sell your home for $40,000 more than you could have sold it for, isn't that worth it? And at least in our market, that kind of return is possible. That's like doubling your money. Spend $20,000 to get $20,000. Who doesn't want to do that? Your realtor should be able to give you a clear idea of how much you could list your home for if you do the repairs. This is a report that my team did for a recent seller. We listed 3 different options for her: selling as is, making a few updates, and doing a more extensive remodel to maximize the profit. Think about this. Many of your potential buyers are people moving across the country to a new location. It's a huge life change. They're stressed. They don't want to deal with home repairs. Most of them are not wanting to HGTV their new home. They want it already done for them, and they will pay a premium for a home that is move-in ready with all the updates done. Misconception number 3, contingent offers. I know that there are a lot of obstacles to selling your home first. What if you can't find another home? But for most people, they're going to need the equity in their current home to pay for all the inspections and deposits on their new home. So the most reasonable solution is a contingent offer, right? I still hear people say things like, I need to sell my house before I buy, but my house is going to sell in one day. day, so I'll just make a contingent offer. Of course, the seller on the other end will understand. They know it's a seller's market and my home's going to sell quickly. The contingency on my offer won't really affect it. I'll tell you why that isn't true in just a second. Yes, there's that fear that you won't be able to find a new home, but there are things to fear about contingencies as well. Let me share just a few things that could happen if you make an offer on another home before you've closed on the home that you're selling. The buyer that is purchasing your home for sale could terminate their offer. I've seen this happen so many times this year. There are a lot of things that are different in our current market, and lending has gotten a lot tighter. I've seen more transactions fall apart in the last year than I ever have, and I had one buyer whose home was under contract that had 2 contracts fall through while she was under contract to purchase. Can you imagine the stress of that? And if you hadn't set things up so that you could still purchase without the sale of your home, that could cause your purchase to fall through as well, which means quite a bit of money in lost deposits. Any offer you make with your home under contract will be less desirable to the seller of that property. Remember, you're likely going to be competing against other offers in your purchase. That seller knows the potential for transactions to fall through because their agent is telling them. Think about this. If you received several offers for your home and one of them was contingent upon the sale of another home, how much more would that contingent offer need to be in order for you as the seller to take the risk of the contingent offer? It would probably have to be quite a bit higher, right? If you're asking a seller to take on additional risk, they have to be getting additional rewards. So your contingent offer is going to have to be a lot higher than other offers. Contingent offers cost you. Okay, so what if you want to avoid some of these pitfalls, buyers backing out and the cost to you of getting a contingent offer accepted? What can you do? I've got 4 options for you that could help you. It's a seller's market, so when you're selling your home, be creative in what you ask your buyers for. Now, you need to ask for this stuff during the contract negotiation period, not after everything is already signed, but ask them to lease the home back to you. 2 or 3 months isn't a lot to ask. These buyers are just happy to get a home in many cases. They're benefiting by locking in the current interest rates, which are low. You're benefiting because it gives you some time to make your offer without the contingency. It's a win-win. Option number 2, take out a home equity line of credit and use that cash to either pay cash for the home you're buying if you have enough equity to do that, or if not, option number 3, you should try to qualify for both properties so the offer you write does not need to be contingent on selling your current home. If you do this, you definitely want to have that HELOC in place just in case the offer on your current home falls through. If you have the HELOC and your current home falls through for some reason, you can go ahead and close on your new home and you have the money for down payments and such. Yes, you're going to have to carry 2 mortgages for a month or 2, but the reality is it is a seller's market and the odds that you'll be carrying that extra mortgage for long is pretty slim. There's a little extra cost doing it this way, but some lenders have HELOCs that can roll into the new mortgage that can save you a little bit in fees. And that's another thing I'm going to add. People are sometimes afraid to talk to the lender, but a good lender can be a wealth of information and often know of different loan programs that can apply to your situation that can really help you. Talk to them. If you need someone to call, ask me. I can send you someone good. Before I tell you the last option, I want to say that if you're thinking of buying or selling and you need help with that, I've got an extensive network of agents across the country. If you're in my area, Raleigh, North Carolina, I can help you. But wherever you are in the US, just drop me an email and I can help you find someone. My email is in the comments. And now the 4th option you can use to avoid making a contingent offer is to use a program like Ribbon. Ribbon is basically an investor that will buy the home for you, hold it for a short term, and then sell it back to you when you're ready. This is how it works. Ribbon's going to buy the home you want to purchase with a cash offer, and they can usually close pretty quickly within a week or 2. This allows you to get a competitive edge when buying a home because it's both cash and quick close, which some sellers might like, especially if the house is vacant. And that's a good thing because Ribbon does charge a fee. The fee is 2%, but it's possible to make up at least some of that amount because your offer is more competitive than an offer from someone needing lending. Not all sellers will take a lower offer because it's cash, but sometimes they will. I would imagine a seller who has already had a contract terminate might be particularly open to taking a lower cash offer over a financed one. I did also want to address the idea of selling by owner in a strong seller's market, but I think this video is already getting way too long, so I'm just going to plan a whole video devoted to FSBO. Right now, you can watch this video about the best home improvements to get the most return on your money, and subscribe so you don't miss that upcoming video about the pros and cons of selling FSBO, how to make the most out of it if you do decide to go that route. Thanks for watching.